Hi guys, Lynette Zhang, Chief Market Analyst here at ITM Trading, a full-service physical precious metals brokerage house. I wanted to do a quick little update on Deutsche Bank for those that have watched the other webinar. These are the headlines from February, and you can see that they lost $2 billion. Now, of course, they said that they were not going to issue any stocks, that they were going to be selling off assets to raise the capital. But today, they came out and said that they do want to raise $8.5 billion in stock, and you can see what the stock has been doing. In cash, rather. So they have to issue equity, the stock equity, and you can see the selling of the stock has spiked. There's the average. That's where it's been. Okay, so I'd say that we're in crisis on Deutsche Bank again. These are their Coco Bonds. Now make sure, I'm going to put it down a little bit, but make sure these are all in JPEG at the link below, so go look at this. Now what a Coco Bond is it's a bail, simply put, it's a bail-inable bond. So with the price plunging like this, what that indicates is that they expect those bonds to be converted to equity in the failing institution.
Who expects that?
Any of the holders of these bonds, they're selling them.
Because they're afraid of that.
Exactly.
Okay.
Because they know the most likely outcome is that they will be converted to equity. That's the whole point of a Coco bond, and I should do something just on Coco bonds. We don't have them here, but they use them extensively in Europe. It is a bail-inable bond. Okay. Also, their derivatives, the CDS stands for credit default swaps. So this is the likelihood that Deutsche is going to be able to continue to pay on their other bonds. When you see it spiking like this is the highest that it's ever been. So essentially what the markets are saying is they do not expect Deutsche Bank to be able to pay the rest of their debts.
And that's in a short period of time, it looks like, just in the last month and a half or so.
Right. Yeah, exactly. I mean, this is saying that the market does not believe Deutsche Bank is going to survive. Now, in this bid to raise that 8.5 billion euros, okay, Cryon, it said that they must deal with legacy issues, and there's actually a PowerPoint on that. And you know what, I'll give that link to Bill if you guys want to look at what he's coming out with. But a big area of that is they want to get rid of the old derivatives that they had prior to 2007, where there's only bilateral. In other words, they're on one part of the contract and some other corporation or entity is on the other part of the contract. All those derivatives are still floating out there. And you see the difference between the EU GDP, the Deutsche Bank derivatives, and Germany's GDP. This is, when this thing implodes, there is no stopping this. And that's what I'm trying to show you, is they are on the brink, and that's what the markets think too. Because, remember, the IMF, the IMF told us and showed us that Deutsche Bank is completely the most dangerous bank on the planet and absolutely interconnected to every other financial institution out there. So when Deutsche Bank sneezes, the whole world will catch probably pneumonia. So I wanted to keep you abreast of what's happening with Deutsche Bank. More on that later, but that's it for today. I'll see you tomorrow. Like us on Facebook. Subscribe to our YouTube channel, say hello on Twitter, and make sure to give us a call at 888-696-4653. Bye, guys.